I talked about the other day the fact that the yield curve has been flattening from a bullish perspective, right? As long-term rates are getting closer to short-term rates, but the 30-year is slipping relative to the 10 and 5. So we are becoming potentially more inverted if we see some buying off these highs, and if we see more buying in the 30-year Treasury mark, right? Well, let's talk about the Fed at this moment. What is the Fed likely to do? Well, they're likely not to raise rates. Nobody's expecting them to raise rates. So one thing to watch for today is, what does the Fed do regarding that last quarter point? Do they wipe it off the map and say, okay, we're likely to peak here? Well, because, let's go out to, for example, May, right? This has not really moved much at all. But the point is, we're still not talking about a very high probability the Fed's going to raise rates by May. Maybe about a 30% probability they raise a quarter point. Has this changed much at all? Well, from a month ago, but since the CPI PPI prints of last week, this has adjusted a little bit, normalized even, right? So my point in sharing this is saying, look, the market's pricing in more of a probability the Fed is by May. There's more of a probability the Fed is going to cut by May as opposed to increase.